Okay, good morning. Morning, all of you. Did you all work on those questions from PB? There were a few questions I asked you all to do, which mostly is about depreciation and all. Did you all do them? Okay. We'll quickly do the revision of the PPE standard, wherein we'll see what all are covered under this standard in just a single chart. We'll try to put that in a single chart. So that you also have an idea what all we covered here, and then everything is at one place. Okay, so many things were discussed, no, in PPE standard. So they are scattered also. That one place that it is about depreciation, one place it is about revaluation. So many things. So now we'll put all of them into one chart and see, so that it is easy for you also to remember. Okay. So when we were when we were talking about this AS10 PPE standard, we started with what? Scope, right? We started with scope and what are covered under the scope, which means the standard covers what? Does it cover everything under the world or only few things? So then we had some inclusions and exclusions. We told that biological assets are excluded. Yes or no? This is one thing. And wasting assets. Okay, this was one thing we discussed when we were discussing the scope of the standard. Then we discussed about the definition. PPE definition had two things. Are you all there? When I'm writing also, you can respond in the chat box, like whatever you remember, so that even I know that you all remember something from the standard. Okay, I'm writing it, but still, yes, two conditions. One condition is, what is the first condition? For PPE definition, not the recognition. It is for the definition. Should be used in your production or your business, or it can be used for your admin purpose. It is not future economic benefit. No, that is wrong. Future economic benefit is checked for your recognition. Okay, definition may we only had these 2 points, where it should be used for more than 12 months and it should be used for production in your usage or your production, either for your rental or for admin purpose. This was the definition of PPE. And we also saw the definition of biological assets. Right? And for biological assets, we saw what is the biological transformation and all that. That was part of the definition. Then we discussed recognition. Now, in recognition, there are 2 points which you are talking about. Future economic benefits. When will you recognize a PP into your books of accounts? When you have future economic benefits and cost is measured reliably. Right? So these two are main important points for recognizing a PPE. Then comes measurement. In measurement, again, we had two things. Initial and subsequent, right? Initially, we thought it should be at cost model. Subsequently, it can be cost or revalue. Yes, cost or revaluation model, you all are right. Cost model में if it is purchased or if it is self-constructed, we have different categories of cost to be involved, right? The first one will be purchase price. Recoverable duties and taxes is one thing. Attributable cost. Indirectly attributable cost, yes. There's one more main thing, decommissioning. Yeah, you all mentioned. Decommissioning. Or restoring also, we can say. Decommissioning or restoring cost is one main thing. And we also had some exclusions. Exclusions may we saw what are the exclusions where cost if it was for relocation or construction and all those things, any operating cost or all those cannot be included in your purchase cost or cost of the asset. Yes, rebate and discount also, it's also an exclusion. If you have any rebate and discount, that is also excluded, right? And if it is self-constructed, then we also had few things. One was raw material cost. Then we will have labor. Then we will have your overhead cost, right? Other than this, there was this additional thing I told you about the borrowing cost, and I told you we will discuss this when we are doing borrowing cost standard. So borrowing cost also was one thing. And any other exclusions if you have. So these are included in the cost of your purchased asset or self-constructed asset, right? Yes. Now, let us see about the subsequent cost. Subsequent cost also, we had one table, if you remember. Regular day-to-day expenditure or cost will be taken to P&L statement, right? If it adds or say it increases useful life or efficiency, both. If the useful life is increasing or the efficiency of the asset is increasing because of the subsequent cost, then yes, you can capitalize it. We also have one more thing relating to the subsequent cost, which was that major replacement, or you will have this major overhaul expense, all these things. For this, we have a format also, WDV minus cost of new part minus whole part, which will give you right. So this was for the subsequent expenditure. So in measurement, we had something about initial and subsequent. In initial, it should be measured at cost. How will you measure at cost? What are included and excluded in cost is what we saw. Then in subsequent also, you can't capitalize everything. It is a condition. So what will you capitalize? What will you not capitalize is what we have seen this. Now, other than this measurement, we also had one more thing, which is exchange. If you remember, exchange of assets, right? And I told you if this exchange is for non-cash consideration, again, you will have to check for two things, right? Checking for two things. What are those? Anyone? Exchange of assets for non-cash consideration. Yes, commercial substance. Yes, you're right. You'll have to check for commercial substance. And no commercial substance. If no commercial substance, then it is easy. WDV of asset given up. Yes. If you have commercial substance, then three are given to us. Priority is first for fair value of asset given up, fair value of asset received, or these two are not available, WDV of asset given up. This is for the exchange of the assets. Then once the exchange of assets were done, we discussed about the revaluation, if you remember. Revaluation. So revaluation was again a set of things that we discussed. Revaluation should be done for entire class of PPE. This is very important. We did as an example also in this. Entire class of PPE you will have to revalue, right? The frequency is you can do it annually or you can do it 3 or 5 years once. Okay. When will you do annually? When you have volatile. Volatile changes in fair value. Then you don't have volatile or the changes are insignificant. Insignificant changes in fair value, then you will put for 3 to 4 years once revaluation. This is for revaluation. And we also had revaluation increase or decrease. Yes, in revaluation increase or decrease. Increase may it has to go to, there is an increase, it has to go to capital. If it is a decrease, it will go to P&L account. Yes. But there is an exception to this rule. For this also you have an exception. What is that exception? Previous decrease. And here previous increase. If you have any previous decrease, that have to be adjusted first. We did a problem also in this, how this works. So just remember there is an exception. That exception is if you have an increase, was it a previous decrease or something like that? And if it is a decrease, was it a previous increase or something like that? These two have to be taken care of, right? Then we have depreciation. This is also, a huge part that we discussed. In depreciation, I told you about three factors. Cost of the asset, useful life, and what is the other one? Three factors may cost of the asset, useful life, and three main factors. Yes, scrap value, or we can say residual value, right? Right, these three are the main factors. And how will we calculate depreciation? Depreciation is equal to depreciable amount divided by useful life, correct? Now, what is depreciable amount? This also had a formula. Depreciable amount will be equal to what? Cost of the asset minus residual value. This will give you depreciable amount, right? And when will you start depreciating? When will you start depreciating? Available for use, very good. Agreed. When will you cess? There's a cessation also. If you remember cessation, I talked about residual value. If the residual value is more than carrying amount, we did a problem also. When the residual value is more, your depreciation is zero, if you remember. So that is called cessation. When will you not provide depreciation? Zero depreciation is called cessation. Okay, when will you stop? When it is disposed of, when the asset is disposed of. Not derecognized also, we can say. There is no asset, no more depreciation. And what are the methods of depreciation that we have seen? There were three methods: SLM, WDV or diminishing, and units of production method. Right. These three were the methods of depreciation we have seen. And when talked about change, what did I tell you about change? Can we change the depreciation, change of depreciation? We can do it. I told you, yes, we can do, but it is called what? It is called changing accounting estimate, right? And I also told you this will be having prospective effect, not a retrospective effect. From today, you will start changing. That's it. This we discussed about prospective effect. Okay, I think that's it. We discussed in the depreciation part. Then derecognition. When will you derecognize? There were two conditions, or two types of derecognition. When there are no future economic benefits is one thing I told you. When there are no future economic benefits, and if the asset is disposed of, we will derecognize it from our books of accounts. And how will you calculate this? Carrying amount minus disposals amount will give you profit or loss. This should go to your P&L, right? Any difference, any profit or loss on disposal will go to your P&L statement. This was about derecognition. Then we had last May disclosures. We had general disclosures, additional disclosures. For revalued assets also, we had some disclosures. And then last May, we had voluntary disclosures. Right? Don't know if you can take this chart, a screenshot in full. You can't take, I think this is, you have to take it in parts. Okay. Or if you want, I can put this link, whiteboard ka link, I can send it. I think that will work. That would be better, I think, rather than you taking the screenshots. I'll share this. This can be shared, this whiteboard, but only link can be shared, okay? I can't convert into a PDF or something like that. So link I will share. If you click on it, this whiteboard will directly open. So I'll share that, okay? Okay. So this is like the PPE standard entirely. If you look at this, this is the entire PPE standard, almost which covered everything that we discussed, right? So the scope, definitions, recognitions, how will you measure? And when there is an exchange of assets, how do you do? Then how, when revaluation is done, when you, how many times the frequency of revaluations, increase or decrease in revaluations, then when will you start depreciating? When will you stop it? When will you, suspend it? Or what are the different methods of depreciation? Derecognition, disclosure. That's it. The standard covers almost this part only, and I have put them all together for you. This I will share. Don't worry about this. I'll share it in the BOS portal. Yes. Okay. Any questions in this PPE standard? Any questions in PPE standard? Or else I wanted to start investments. That's why. Okay, we'll do one thing. I'll start investment standard. I'll maybe conclude investments little early, and in the end, we will put some time for questions because I think I see 2 or 3 people putting these questions in the chat box. So in the end, I will take up those questions. Right, the PPE standard the questions we will take up in the end. We'll close investments a little early so that we'll have time for PPE standard questions. Okay. Right. So I'll start investments for now. Okay. Now, like we discussed the PPE standard, same way we are going to have like different kinds of scope definitions, and then you will have these. In this investments part too, you will have different types of classifications. How do you do them, or how do you measure them? And then few problems also will be there. This chapter is also important because when you know PPE का standard, you only know for few assets how to record for how to value for. But when you're talking about investments, this is like the major kind of investments where companies invest in different sorts, right? Maybe they invest in bonds, they invest in different companies ka shares, sometimes they invest in other kinds of bonds, shares, the government bonds also. And when they are long term or short term, how do you record for it, or how do you account for them, or how do you measure them? All these will be told by the standard, right? We'll first see what is the scope. Like we start every time at the standard. The standard has given us a scope, right? Now, what is not applicable? That is the main thing we will discuss every time. Why it is not applicable and what is not applicable. Now, interest, dividend, and rentals earned, which means what? Any income that is earned. Okay, maybe before going to this part, I will show you the definition. Look at the definition of investment. Investment has the definition given by the standard, which says it is held for earning income. The purpose of this investment is only to earn income. I want to earn income. If I'm doing some investment somewhere, I want to earn some income out of it. Or maybe it is for capital appreciation. Capital appreciation means what? Suppose I purchased a company's ka share. I have purchased 100 shares. Why will I purchase company's share? Will you simply purchase 100 shares of a company? Simply we don't purchase, right? It is because we assume that it will increase in future. Maybe if you have purchased it for 10 rupees today, it might go to 100 or 200 in future. If the company is doing well, it will increase, which means your capital is increasing, your capital is appreciating, right? So the main definition of the investment is one thing, we are assuming that we will have some income or we will earn some income out of it. What will be the income? If you invest in a share, you might get dividend, right? Sometimes bonus shares are issued, right? Right shares are issued. So you get some kind of an income coming up in the form of dividend. Or if you invest in debentures, you will get interest every year or half yearly, whatever it is. So there is some income earned out of that investment, and also for the capital appreciation, right? Like I told you, capital appreciation, it will increase for a longer period. You won't get capital appreciation immediately. You purchase today for 10 rupees and tomorrow you sell it, you won't get capital appreciation. No, capital appreciation generally comes when you're holding it for a longer period. And any other benefits that comes out of the investment, like I told you, you get bonus shares. That is for free. Or you might get right shares, which are given at a discounted price. So all these are like, extra benefits you get out of an investment that you make, right? So the main purpose or the definition of this, the standard says that these investments are generally for holding, we are holding these investments to earn income or to have a capital appreciation or any other benefits that you receive from the investment. Now I will go back to the scope. So main purpose is what? Earning income. So what are the incomes you will earn? Interest or dividends, or if it is given for rent, then rental. All these are incomes. Now the standard doesn't cover all these incomes. Okay, the standard will not tell you how to record for interest or how to record for dividend, how do you account for all these rentals. That is not given in the standard. That is given by AS2. What is AS2? Revenue recognition standard. This standard will tell you, because they are part of income, no? So how incomes are recorded is told by revenue recognition standard. So that standard will talk about this incomes, how they have to be recorded. This standard will only talk how you will have to account for the investment. Today you purchase that investment, or by the end of the year, that investment have to be shown at cost, or it has to be shown at some other value. What is the value you have to show? All these things will be told, right? This is one thing. This is one exclusion wherein it is not included because it is a part of your income which will be covered by revenue recognition standard. Then leases, it is because you have AS 19, which talks about lease, operating and finance lease. So, that standard covers about all the operating and finance leases. So it is excluded here also, right? It is excluded in PPE also, if you remember. It is excluded there because it cannot perform part of PPE. It will be like a separate part. So there is a separate standard also for this. So that standard will cover it. Okay. Now, the other exclusion is about the life insurance enterprises, retirement benefit plans, and all. These are excluded mostly because these are unique, we can say. Okay, these are unique, and these are highly regulated also. When you say any retirement plan, it has to be highly regulated. You cannot value it simply. Right. So the companies who run all these kinds of businesses, giving you a life insurance or all these things, are highly regulated. The authorities that regulate them are also different. So the measurement, or the way you will have to show them, will be completely different when you talk about the retirement benefit plan. Same goes here also. Mutual funds, venture capitals, all the asset management companies, banks, financial institutions, all these are also not covered in the standard. Because what happens with these companies, their main role is only investment. Correct? What does a mutual fund company do? They do invest in different companies' share. Venture capital funds also. They start investing in different kinds of startups. Banks also. It's not like bank, does give you a loan and take deposits. It also has huge investments, because whatever deposits they collect, they have to put it somewhere. They do in the form of investment. They invest in government bonds, or they invest in the debentures, or the shares of different companies. So their major role will be to do investment. So such companies, like I told you, they are regulated by IRDA, or they are regulated by the Banking Act, Insurance Act, and all this. So these are also excluded from the scope of the standard. We are just simply going to, in the standard, we are just simply going to do the investment are normally invested. A company is normally investing in shares. It doesn't run any bank or financial institution, or it doesn't run any life insurance company or any retirement benefit plans. Then such kind of a companies, whatever investment they do, how do we value them is what we will discuss in this time, right? Yes, Aditi?
Ma'am, I didn't get one thing, that why this is not applicable to mutual funds and venture capital. Like the main role, like their main business is something they
Hmm.
used to invest. So why it's the standard is not applicable to them?
Because they have their own acts which are telling them, right? They have their regulatory authorities which are telling them how to value. So we can't depend upon us standard which is generally providing the basis for valuation. These are very specific companies, and their main role is hugely investing. So in such kind of companies, you can't randomly say I will go for you know cost, or I will randomly go for fair value. They will have to have that regulation followed, wherein specific acts are there for them to. IRDA is one thing which is there. RBI is there. All
Yeah.
these acts will tell you that these are the regulations you will have to follow. So they will value it accordingly. They also have a different format. If I don't know if you all have covered it, or maybe you will be covering later. Banking, insurance companies, and all these have a different kind of financial statements only. They don't follow the format that is followed by the general companies, right?
Okay.
They have a
Okay.
different format completely. They doesn't follow the format which we have in the schedule 3 of the companies act, right? They're regulated completely different. The regulations that they have are completely different, so they follow that. They follow the regulation of that particular acts only.
Okay, ma'am. Understood.
Akila, can you repeat the question? I didn't get you. See you later. Right. So the definition of the investment is clear, and what is excluded from the standard is clear. Right. Now, there are other definitions also covered. I think one person was talking about this fair value and market value when we were discussing PPE standard, right? And he was asking me also. Ma'am, fair value is different, market value is different. And I told you can interchangeably use, right? Now, we are having two different definitions, but if you look at them, they will almost look similar. And when we are doing the problems also, we generally interchangeably use the words fair value and market value, because for fair value, to have a base for fair value also, we will take market value only, right? That is why these are interchangeably used. Let's first see the definition. What does the fair value ka definition tell you? This is the amount for which an asset could be exchanged between a knowledgeable willing buyer, knowledgeable and willing buyer, and a knowledgeable and willing seller at arm's length price. Yesterday I told you what is arm's length price also, right? Arm's length transaction. Now, the fair value here by the definition as per AS 13 says that it should be when you're exchanging an asset between a knowledgeable buyer and a willing seller at an arm's length transaction, whatever amount you are exchanging between will be the fair value. Okay. But they also have given you that under appropriate circumstances, market value and NRV provides an evidence for a fair value. Most of the cases what happen is fair value you cannot determine so easily, right? In case of these shares, when you have these investment in shares and all, you have an active market available. What is the active market? You have BSE, NSE markets available, right? They will tell you what is the share of a price. So in such cases, what you do is you try to prefer the value from the active market, which is you go to the BSE and see what is the Reliance company share quoted there. Reliance Limited ka share, how much it is. You check there. That's an active market, which is going to tell you the share price. So such price will be taken as a base for your fair value. So fair values, the definition says that it should be a price that should be, exchanged for between both willing buyer and willing seller at an arm's length transaction. But when you don't have a proper base or most of the circumstances, we try to prefer the market value or NRV. You all remember what is NRV? Where did we discuss NRV? AS2, you remember that? Yes. In AS2, we generally discuss about mostly the NRV. What is NRV? If you are selling a particular asset, any expenses relating to that asset are also removed. Net amount is whatever net amount you realize will be net realizable value. So that is the definition of fair value. Now, what is the definition of market value? This is again simple. Obtainable from the sale of an investment in the open market, net of expenses necessary to be incurred on or before disposal. When you want to dispose of a particular investment in the open market, what is the amount that is obtainable from that sale? Net of expenses, because you might have some expenses also, like the brokerage or any other expenses that have to be incurred. A net of all those expenses, whatever amount you receive will be categorized as the market value. Like I told you, market value will become a base for fair value. When we are doing the problems also, you will understand this difference, how fair value and market value are interchangeably used, or how we take them as a base and do it, right? Right. So we have three definitions given in the standard. One is the investment definition, and other two definitions are about the fair value and market value. So we are done with definitions. We are done with how do you, what are excluded in the standard, the scope of the standard. Now we will see the classification. What is the classification of investment? In investment, we have two types, either current investment or long-term investment. Very simple. Current investment means what? You can answer. I don't have to tell you also. What are current investments? Very good, very good. Less than 12 months. Very good. Less than 12 months. Short-term benefits. Okay, short-term period, short-term benefits. Good. Right? Okay. So when the company has an intention to hold a particular asset for less than 12 months, then it will be categorized as a current investment. Or that investment is giving you a short-term benefit. You can't hold that for a longer period. You can only hold that period for some 6 or 8 months. Then that is an investment which we can categorize as current investments. But what are long-term investments? What are long-term investments? More than 12 months, right? Or we can say anything other than current asset. Can we say this simply? Anything other than current assets, or generally more than 12 months. When the company has an intention to hold the asset for more than 12 months, then you categorize it as long term investment, right? The classification is very simple. Are you holding, or the intention of the company to hold? Because you can't say that I will hold it today. When you're purchasing, you cannot randomly say I will hold it for 3 years, correct? The intention is known today. The intention of the company is to hold for a longer period or a shorter period. That will decide whether it is a current investment or a long-term investment. That's the classification, simple classification. Now, cost of investment. Now, suppose you have purchased an asset, investment. You have purchased some shares. Do you think purchasing the shares will be straight away coming in the form of only cost? 100 shares you have purchased at some 12 rupees. Do you think this will be the only cost of the investment, or will you have any other costs coming up along with this? Do you have to pay anything else along with this? Sometimes you will have brokerage charges to be paid, because mostly the share market is run through brokers, or it is run through a mediator. Intermediary is there. Directly we won't. Yes, commission also sometimes. You're right, commission. So all these will be additional things you will have to incur, right? So all these also will be added to the cost of the investment. Any acquisition charges, we can say, when you are acquiring that particular investment, whatever charges are incurred, all that will be added to the cost of the asset, right? Now, suppose the shares were not purchased. If they were exchanged, you remember, we have seen this in the PPE standard. I told you that when shares are exchanged, when PPE is exchanged for non-cash consideration, I gave you an order. If you remember, first I told fair value of asset given up, right? Then second one was fair value of asset received. You remember this? When did we discuss this? We discussed this for the exchange of PP, right? You remember this? Same thing will apply here also. If you see, when you have exchanged some investments, then also you will go with the same order: fair value of the asset given up, or the fair value of the investment acquired, whatever investment you got, or whatever investment fair value of the asset you have given up. Anything, both, whichever is more clearly evident. They are not giving you a priority. In PP standard, what happened? Priority was given to you. First, go with this. If that is not available, go with the second one. If that is also not available, go with the third one. So there was a priority given to us, right? But here, there is no priority. You just have to see whatever is more clearly available or evident to you. If you know what is the fair value of the asset given up, take that. If you know the fair value of the asset that is acquired, you received, take that value, right? This is for the exchange. And fair value of the securities issued. This is nothing but when actually have the securities purchased, whatever is the purchase price that you have will be taken up. And sometimes right shares also. I hope you all know what are right shares and bonus shares. Is everyone clear about what are right shares? Okay, I want someone to, because this will be used. Will
Ma'am, bonus share are those share which are get from the company to the shareholders from on behalf existing shareholder. Means
Okay.
existing shares, on that basis we get it in a split. And right issues means what? We splitted the shares into the 1:10, for example, in the ratio. So that is the right issue, which means other than means voting rights, whatever, in the name of share, what we say
Hmm.
as the right issues of that bonus shares and the right issues.
Okay. Maybe I will also just give you a brief idea, because the problems also will be based on this only. So let us discuss about rights issue and the bonus issue, then I will move further. Okay. Now,
Okay.
suppose you have purchased shares. Okay. Suppose you have purchased some 100 shares of X Limited. You purchased 100 shares of X Limited. Done. Now, after a few days, what happened is the company declared a bonus issue, which means what? Bonus issue means the shares are given for free. Okay, shares are given for free, which means if suppose you are holding they will tell you a ratio, suppose 1:3. Okay, they told we are giving a bonus issue and the ratio is 1:3, which means what? If you are holding 3 shares, you will get 1 bonus share. Is this clear? 1:3 means what? If you are holding 3 shares, you will get 1 shares in bonus or for free, right? Now, this 1 bonus share, whatever you get, will be for free. You don't have to pay even a single rupee. That is why it is called bonus. The company wants to give you a extra benefit, so they are giving you this. And one more thing you should remember is both these issues are for existing shareholders only. It cannot be given to the new persons. Okay, existing shareholders. Which means what? If you're already holding shares only, you can get bonus or rights issue. If you are a new person, you can just go to the market and buy. That's it. But you will not be eligible for any bonus or rights issue, right? So 1:3 means if you're holding 3 shares, you get 1 bonus share. That is bonus issue, and this is for free. No cost is involved in it. This is called bonus issue. Now, rights issue means what? The company told 1 for 5. Okay, 1 for 5 rights issue, and I also gave you a price. Let us say 8 rupees. Okay, the shares face value, or what is the nominal value or face value? What is the nominal value or a face value? I'm waiting for the answers. We can't say market value. One of you are saying that is market value. No, we can't say that. Yeah, most of you are right. Yes. So face value or nominal value means what? We can say par value, right? If suppose when we are, the company is starting up, they have declared that 10 rupees is my par value or 10 rupees is my face value or nominal value. So this will remain, right? But can you only issue for 10? Not needed. You can issue for discount or you can issue for premium. Correct? Premium means you are issuing it at 12. Discount means you gave it at 7. But par value remains same, right? Face value or nominal value will remain same. It will not change. Any number of shares you issue, the par value will remain same. In future, after 10, what happens? Suppose after 10 years, the share value is now, suppose, some 1,000. Okay. Today, if you go to the BSE and want to purchase this company share, it is costing 1,000. Can I say this 1,000 is nominal value? In the market today, if I have to go to BSE, can I say that this 1,000 rupees that is, traded in the market is my nominal value or par value? I cannot say, right? You all are right, right? So this is not called par value. This is just called market value. If someone wants to buy in the market, they can buy it at market value. But par value is something that will be decided at the time of issue itself, right? So this is nominal or face value, right? Now, the nominal value of this share or the face value of this share is 10. And the company has given you a right to purchase it at 8 rupees. Okay. What did the company give you? Did the company give you any benefit here? Yes, they're telling you that if you are holding 5 shares, you can get 1 share, but not for free. You can buy it at 8 rupees. What is the benefit you got here? In the market, if suppose in the market value of this share is 20 rupees. So what is the benefit you got here? 12 rupees is the benefit you got here, right? So this is the benefit that the company is giving you. So you have a right to buy this particular company share at a lower price than the market value. That is why it is called rights issue. Rights issue means the company is giving you a right to buy it at a lower price than the market value. Am I clear with what is bonus issue and rights issue? In bonus issue, it is completely for free. It depends on the ratio. All might be bonus or might be the rights issue. Both will depend upon the ratios, but one is for completely free and the other one is completely at a discounted price, we can say, other than the market price. Mostly it is below the market price only. Otherwise there's no benefit of giving it to the shareholders. And like I told you, it is given to only existing shareholders. You can't give it to the new ones. You will only give it to the existing shareholders. Is this clear? Those who were not clear about the bonus issue and rights issue, I hope now you are clear. Because we will keep doing problems on this, I want you to clear it out now itself.
Ma'am, in the set example of the par value, this rupees 10 is this like this is the only same which is nominal value and also the face value.
Yes.
Okay, so nominal and face value are not two different things. They are the
No,
one.
they're same. Yes, they're same. Nominal value, face value, par value, they are interchangeably used. Yes.
And this 1000 rupees will be the market value
Market
after 10
value,
years.
right? This is the market value. Market value will keep changing, no? Par value, the nominal value will remain same for n number of years. Like till the company exists, mostly it will remain same unless until it has a big procedure also to change the nominal value, and people don't do it, so they retain it. Only the market value will change depending upon the demand and supply.
Okay, ma'am, understood.
Okay. Now there's a small question. Look at this example. So X Limited has invested in long-term deposit worth 200 lakhs at 1st April 2022. It incurs brokerage of 1 lakh to be able to make the investment. The value of the investment will be 2. Just simple example. When we are talking about all the acquisition charges and all, like I told you, you can't say that since I have paid 200 lakhs, only this will be my cost of the asset. You can't say that. You will have to add all other charges like the brokerage, any fees, or any other expenses that you have incurred to acquire that particular investment also have to be added. So here I will add that 1 lakh also and say that my total cost of investment is 201 lakhs. Very simple example just to understand how it works. Now, this exclusion part, whatever I told you about these added things, I didn't tell you about these reduced cuttings. I will talk about these once we are doing problems, because now if I randomly say, you will not understand why are we reducing. I'll do 1 or 2 problems and then come back to the slide so that it is more clear to you that why we are excluding or how we are excluding. Okay. Right. Now we will see about the carrying amount. Carrying amount means what? What is a carrying amount? We are, I think, discussing this carrying amount from the past 3 classes. So I want someone to say what is the carrying amount. What is the carrying amount? Value that is shown on the face of financial statements. Okay. Okay. Balance sheet. Current price. Carry forwarded to the next year. Okay. Okay. So when you talk about PP, what happens in PP? You will have cost and you will have some depreciation also. That will give you carrying amount. Generally, this is what happens in PP, right? Now, in case of investment, you don't have all those depreciations and all, right? Depreciation is not there in your investment, because if the investment is depreciating, there's no point in investing, right? We are doing investment to have some capital appreciation or to earn income out of it. Nobody wants to, invest in such a share which will be a loss or which will depreciate in future. If it is depreciating in future, it is due to some other reason, then that's fine. If you have decline in price or reduction in some price market value, that's a different story. But your intention was not to, have a depletion in the value of your investments, right? So the depreciation concept will not be there in your investment. So then how will you calculate carrying amount? What will be the value you will show? Now, like you all are mentioning, you told that on the face of the balance sheet, what will be the investments value in the balance sheet? What will be this value? I want to know that, right? This is what we will show in the balance sheet. How will you calculate this value? The standard is giving you a solution to it. How do you calculate this kind of investment value in your books of accounts, or how do you show this value in your books of accounts? Because this value will completely change the picture of your balance sheet, or it will give a representation to the shareholders, or it will give a representation to the persons looking at your financial statements. Now, if I say the investment value is 1 lakh or the investment value is 10 lakh, there is a huge difference between these two values, right? I can't randomly say it is 1 lakh or 10 lakhs. There should be a base. That base is given by your standard, right? Now the standard has segregated the items into two again. We have seen this classification before also, current and long-term investments. So for current investments, the way you show the carrying amount is different. And for long-term investments, the way you show the carrying amount is different. So for current, they have given you an option to choose between the cost and fair value, whichever is lower, right? You have seen such kind of a word in your AS2, the inventory standard way, right? So here also the same kind of an option is given to you. Current investments can be shown at a carrying value which is lower of your cost and fair value. Lower of your cost and fair value should be the value that you will show. And what about the valuation? Valuation means what? Can we, current investments might be, you can say current investments heading, but you will have a lot of investments involved in it. Like, you have invested in X Limited, or you have invested in bonds, you have invested in debentures. There will be a lot of categories, right? Now, can I take all of them together and see what is the cost or fair value? Mostly the standard says prefer to do it. If you want to do it on an overall basis, is fine, but then it doesn't give you a most appropriate consideration of the value. So better to take the individual investments and do it, which means I will see what is the cost of X Limited and what is the fair value of X Limited. Okay. If I have bonds, what is the cost of the bonds? How much did I purchase this for? And what is the fair value in the market right now? So all these are individual, prefer to individually do it, is what is the standard telling you, right? Individually. Yes, individually you will have to value the investments. That is what they are saying. Same goes with the long term also. You have to prefer mostly doing it individually only, because doing them in together will not make sense also, right? You put all the investments together and see what is the cost. And if it is, say, X Limited, you invested in X Limited. On one particular date you invested 200 shares, and later you invested 100 more shares, then you invested some 1,000 more shares. Can I put all these together and value? Can I put all of these together and value? X Limited ka shares together I can take. I'm telling you, once I purchase 200 shares, then 1000, then 100 shares, these all I can put together and value. That's not an issue. But I'm telling you, X Limited, bonds, debentures, all of them, all different categories of investments, putting them together and valuing them is not a is not a prudent way of valuing your investment. So the standard mostly says you prefer to do the investments individually only. Okay, so this is one thing. So when it is a current investment, you will show carrying amount at lower of your cost or fair value, right? And you will value it at, I mean, the investments are mostly valued individually only. You will prefer to value them individually. That's one thing. Now, suppose I told you cost and fair value. I told you cost and fair value. Now you might have some reduction in fair value. Excuse me. Now, I'll take an example. So I've purchased a particular investment for 1000 rupees. And then when I was checking for the fair value at the year end, I see that the fair value is only 850. Now, what is the standard telling you? What is the standard telling you? It should be cost or fair value, whichever is lower. So what should be the value you will show now? What should be the value you show now? 850, Paka? Yes, very good. Almost all of you told that. 850, we know that. But now what will happen to the difference? How much is already in your books of accounts? Your books of accounts has a value of how much already in your books of accounts? You are already showing investment at 1000, no? 1000 was already recorded. Now, I have to reduce the value by how much? I will have to reduce by 150. Yeah, right? The investment value have to be reduced by 150. Correct. Now, when you're reducing, there should be an effect that will go to some other account also, right? Investment value is coming down, good, but this effect have to be given somewhere else also. That somewhere else is nothing but your P&L account, because we have that P&L account, everything throw there only. Whatever you see, profit, loss, everything throw it to P&L statement, because that's a very good account. It will take everything. It will not say no. It will take whatever you want to throw there, right? So you are going to show it in your P&L statement. This loss is mostly shown in your P&L statement. Loss is shown in the P&L statement. Matlab, you will debit or credit it. This is a loss to me. I'll debit it or credit it. Debit for sure, right? If it was an income, you will credit it. If it is an expense or a loss, you have to credit it, right? Debit it, right? Okay. Now, yes, you are right. Very good. Now, one more thing. I'm going back to BP. I'm comparing the other standards also so that you can relate. Okay. Don't think why ma'am is every time going to PPE standard or inventory standard. It is just so that you can interlink. Okay, and then when you're doing problems, what happens is it will give you an interlink when you are solving the problems also. Okay, so when we did the same kind of things when we were doing that standard, you will be able to interlink. So that's why I mostly try to interlink. It will be easy for you to remember also. Okay, so when we were talking PPE standard, I told you about increase or decrease revaluation. In revaluation, I told you increase or decrease, and I gave you an exception there, if you remember. Right? Yeah. Now, this exception was what? This exception was what? If it was a previous increase or decrease, that have to be adjusted first. That is what I told you, right? Now, same thing we will repeat here also. Now, this is a loss, correct? In this year, we had a loss. In the next year, suppose in the next year, the fair value has increased. Now the fair value is 850, right? Next year, the fair value has moved to maybe some, let us take 1200. Okay. 1200 is the fair value. Now, can you credit to this P&L account? You have a profit now, no? Can we credit it to P&L statement? Is the question. When we had a loss, we have sent it to P&L statement. When we are having a gain, can we send it to P&L statement? Yes, you can send it to the P&L statement. Yes. So this, when you are having a gain in future, subsequently after a few number of years, if you have gain, you can credit to P&L statement. The standard allows it. You can credit it to P&L. Okay. But with the condition that it is only up to the extent of cost, which means what? Which means what? I can only credit up to how much? 150. I can't. Now, what is your profit here? What is your profit here? Your profit is how much? From 850, it went to 1200. Your actual profit is 350 here. But the standard says don't, send entire profit to the P&L statement. Send it to the extent of your cost of investment only, which means it is restricted to 1000 only. Cost is 1000. So till 1000, whatever profits you have, you will have to restrict it. The reason behind this is only because, people wanted to inflate the and show it at a higher price. It will create a lot of income fluctuations in your P&L statement. This is an income that should be shown in your P&L statement, right? So it will increase your P&L statement so heavily. Profits are heavily shown because of the investment. This is actually a proper investment. I mean, proper income to you. There's not like a proper income, or this is not your main income, right? This is just a capital appreciation that you want to do. So to mostly ignore such kind of inflations in their income, the standard has put a restriction that you can only credit to the P&L statement to the extent of cost of investment. Right? Okay. So this we were talking about current investment. Now we will talk about the long-term investment. So current investments have to be carried at the cost or fair value, whichever is lower. But long-term investments have to be carried at cost only. They have to be carried at cost only. The reason behind such a difference is when you're talking about current investment, what happened? Why 150 is credited? You all are not clear why 150 is credited? I gave you an example, no? Okay, I'll go back to that example. I told cost was 1000. Fair value was 850. This 150 loss, you have sent it to P&L statement, now, right? Now, next year, this was year 1. Same example, like we have done PPE only. Remember PPE ka? Now in year 2, what happened? Your fair value is 1200. Okay. So what will be the profit that you send? Now you have a profit of how much? 350. Agreed? But 350 cannot to P&L statement. I can only send 150 because initially how much loss you have sent to P&L statement? 150. That's one reason. And also there is a restriction of cost. Only till the extent of cost you can send to P&L statement, which means the fair value from 850 to the cost of investment. What is the difference? What is the difference? 150. Only to this extent you can send it to your P&L statement. If the fair value is 2000, or if the fair value is going to 5,000, you can't keep sending everything to your P&L statement in the form of profit. You can only send it to the extent of cost. So whatever is the cost, you will have to see that. If the fair, let us suppose the fair value was 700 and you have cost as 1000. So what is the difference between these two? 300. Only to the extent of 300 you can send it to P&L statement in future if you have a profit. If you have more than this profit, that extra profit is ignored. You can't do anything with it. Only to the extent of cost you will have to credit it to the P&L statement. Someone was asking what will happen to the excess. That excess 200, whatever is there, here 200 is there, na? This will be ignored. The standard clearly told any excess portion will be ignored. Credited only to the extent of cost of investment. You read this point once. You read this point once. This point. This part. I'll just pause. Just read that point. But I told you in the form of an example so that it is easy for you to understand. Now clear? Those who were asking questions. Okay. Okay, now when we come to the long-term investments, it should be carried at cost only. So we are not going to check for fair value. It is because the intention of the long-term investments is to hold for a longer period. So you can't inflate, you can't start checking for fair value and then inflate the prices. So mostly we prefer to show it at cost only. But if there is a decline, which means if the fair value is coming down, if the fair value is coming down, then you can charge it to P&L statement. I mean, like the same example what we have taken, if the value is 850, you have purchased it at 1000 long-term investment and the fair value is 850, this difference of 150 you can take it to P&L statement, no worries in that. But mostly we prefer to show it at cost only. Now here also there is an exception. Exception means they say this word other than temporary. If you see, other than temporary, okay, other than temporary means what? Now suppose this decline, I told you that the fair value has come down by 150. If this decline is a permanent decline, what is this? A permanent decline, which means the shares, maybe the market was completely down, or you can say the company went into a bankruptcy, or the company is running into operating losses for so many years, and in future also it is expected to have a lot of operating losses. All these are permanent reasons, right? You cannot restore the company back. When there are permanent reasons, what will happen? You went into a bankruptcy, do you think the company will restore back? Is it easy to restore back such kind of a companies which went into a bankruptcy, or which are into completely continuous operating losses, or if they are having any negative impact on their working capital? There are few reasons which cannot restore back the company, which are called permanent reasons, we can say. So if that fair value decrease is due to a permanent reason, then you can send the loss to the P&L statement. Am I clear? This point is clear. If the reason of decline is due to a permanent reason, they're saying other than temporary, which means a permanent, reason of decline, then you can check for the fair value, and any loss you can take it to the P&L statement. Okay. And suppose if it is a temporary reason means what? What can be a temporary reason? Anyone? Why temporarily the market value will come down or the fair value will come down? It might be because the market is fluctuating. Main reason can be market fluctuations, right? Yeah, competition also sometimes. And if suppose that particular industry is facing that issue, it is not only your company. If that industry is facing that issue, maybe that is such kind of an industry that it is a seasonal industry. So in that particular season, you might have a increase or decrease in prices. Fluctuations can happen. If it is a season, you will have good increase. But if it is a non-season, you might not have sales. So your company keeps fluctuating. The price keeps fluctuating, right? But these are temporary. It's not that your business is running into losses. The fluctuations are because of the market, or the fluctuations are because of the industry, or sometimes you might have to close down your business for 2 or 3 months. Shutdown of the company, we say, right? These are temporary reasons, right? You understood the difference between some temporary reasons of decline and permanent reasons of decline. This is more important, because in the question they will give you a reason saying that because the reason the fair value is increasing or decreasing mainly, you will have to decide whether it is a temporary reason or a permanent reason. So you should have that clarity. Looking at that statement, you should understand whether this is a very simple reason or a temporary reason. The company can restore back and then they can earn their profits regularly, then it is fine. So temporary reason, what will happen? If it is temporary and other than temporary, okay? Two things are there when you're talking about long-term investments. If it is an other than temporary reason, then fair value decline, we will have to send it to P&L account. If it is a temporary reason, you should still show it at cost only, right? Which means what? If it is a temporary reason means what? The company will restore back. They will run their business regularly after that temporary reasons are done, right? So because of that temporary reason, don't change your value in the books of accounts. You can only change when it is a other than temporary reason or permanent reason. That fair value decline can go to P&L statement. Otherwise, it should be shown at cost only. Is this point clear? Yes. Okay. Now, the standard also mentioned about the reduction in the carrying amount is reversed, the reversal part. When they're talking about sending it to P&L statement, they will also talk mostly about the reversal part. In future, now what did we do? There was a reason which gave a decline in your fair value. So that decline in fair value, you have sent it to P&L account. Done. But in future, if the reasons are reversed, or if the reason whatever other than temporary reason whatever was there, it's no longer there, the company is doing good, the value has increased, then can you reverse is what they're asking. Yes, the standard says you can reverse the amount of fair value, and you can show it at the fair value that is existing as on that date. You can do the reversal part. The standard allows you to do the reversal part. If in future the reasons are not existing, or the increase in the value, you can do this reversal. Otherwise, no. But you just have to remember about the temporary reasons and the other than temporary reasons, right? There's one good question in the chat box. She's asking, ma'am, since we aren't selling the current investments, we don't have to recognize profits. Yes, you have to know this also. That is why I'm letting you know the question that is asked in the chat box. So yes, we are showing at lower of cost or fair value. And I told you that you will, if there is any decline, you mostly show it in P&L statement. Are we actually selling these assets? Did we actually sell these investments? No. So actual profit will not be recognized here. It is only about showing any decline in the value, right? Because sometimes you might have a decline in value. So that decline in value, because to show a true picture of your balance sheet, I will have to record further. The main reason, whenever we say cost or fair value, whichever is lower ka word is coming up means what? I don't want to inflate my balance sheet, right? I don't want to increase the value so much that it shows a good figure to the shareholders or whoever is looking at the financial statements. That is not the intention. I have to be prudent enough. I say that today I purchased it for 1,000, but if I'm going to the market, it is only 850 or it is only 700. So you can't show more prices in your balance sheet. The same thing is told in inventories also. The same thing is told in investments also. We try to prefer to show at a lower price only, to be prudent enough, or to show a true picture in your financial statements rather than inflating the profits or inflating my balance sheet. The standard, all the standards are set in such a manner that they try to restrict whatever possible way they have. They try to restrict you to inflate your balance sheet or inflate your financial statement wherever possible. Wherever there is a chance for you to inflate the prices or inflate your balance sheet, the standard tries to put a restriction. Mostly that happens in all the standards. If you look at all the standards together, they're trying to put restrictions on you. It is because you will show higher profits, you will show higher gains, and that will deviate the investors. Okay, investors will have wrong intentions because of these inflations. So to curb all those, only the standards are putting restrictions. So this part is clear. At what carrying amount will you show the current investments and the long-term investments? Are you clear with this? Shall we move to a question on this? Look at this question, illustration 1. See, what happens sometimes in chat boxes, people try to type it in points. So what do? You type one word in one chat and then you type one more word somewhere below, because I keep getting chats from different students. Your one line is somewhere there, one sentence is somewhere in the top and the other sentence is somewhere below. I can't attach them and read them. So if you're trying to ask something, please put in one sentence and try to send it to me. Otherwise, I'll be lost. I can't understand what you're saying also. Okay. Read this question. Yeah. Okay, one more thing before we start. What is unquoted or quoted? Anyone? We call it as quoted shares, unquoted shares, and all those. So what are these quoted or unquoted shares? You have an idea of what is quoted, unquoted, and all that? Okay. I think few people know, few people are answering in the chat box. Yes, you are right. Unquoted means mostly when shares are listed in the market, then we say that it is a unquoted shares. Okay. Suppose we have a company X Limited, which is not there in NSE, it is not listed in NSE or BSE. Then you say it is an unquoted share. Quoted means it is listed in the stock exchange. Then it is called a listed share. Quoted shares are having a market value because it is clearly evident in the market. You can easily identify the market value of a quoted share. But if it is an unquoted share, determining the market value becomes difficult. So what do you do in case of unquoted shares or in unquoted kind of investments is we try to see the similar kind of market. Do we have any similar kind of a market, or do we have a similar kind of a share which is listed, or at least if it is not listed, maybe similar prices of the companies that are there. So you try to pick that. Similar things are picked when it is unquoted. If it is available, similar kind of a company is listed, then you pick that price also sometimes. Unquoted means unlisted company, we can say simply. If a company is not listed, it means it is an unquoted company, right? Or unquoted investment. Quoted means it is listed in the stock exchange, right? I hope this is clear. Now, in this question, what is given? An unquoted long-term investment. This is a long-term investment, is carried in the books of accounts at a cost of 2 lakhs. So the cost is given to you, which is 2 lakhs. Now, the published accounts of the unlisted company received in May showed that the company was incurring cash losses with the declining market share. Okay. And the long-term investment may not fetch more than 20,000 rupees. So what they're trying to tell you, you have purchased this investment for 2 lakhs, but the company, this unlisted company, they have given you the published accounts, which means the financial statements are given to you. They, in that financial statements, they are showing that the company is incurring cash losses and they are having a declining market share is what they're saying. So, and they're also telling you that it cannot give you a value more than 20,000. So hardly you can get a fair value of how much? Only 20,000 it seems. Now, how will you deal with this situation in preparing the financial statements is what they're asking. For you, it is an investment, right? Now, what did the standard tell you? What did the standard tell you regarding this thing, regarding the long-term investment? Regarding long-term investment, what should be the carrying amount? Just now we discussed. I have given you that chart also. For long-term investment, what was the chart that we discussed? It should be, the carrying amount should be at what? Cost only. Yes, which means I should show it at actually 2 lakhs only, correct? As per the standard. But the standard also gave you an exception. What is that exception? If it is other than temporary reason, correct, you are right. If it is other than temporary reason, then you can have that decline shown into your P&L statement. Now, this incurring of cash losses with a declining market share will be a permanent, it is not an other than temporary reason, right? This will affect your business. If you're incurring cash losses, it's a permanent reason, or it is a permanent decline, we can say. So this loss, whatever you have, which means 2 lakh minus 20,000. What is the difference? I think 1 lakh 180K, right? Yeah, 180K ka loss. 180K loss have to be shown in your P&L account. Is this clear? 1,80,000 loss will be shown in your P&L statement. Now, what is the value that you will show under your investments? Under your investments, what will be the value that you will show? Right, 20K. So the journal entry will be what here? The journal entry will be what? 180K and 180K. So you will have to decrease the value of investment by 180K, and that decrease in the investment will be affected to your P&L statement in the form of loss. So what is the value of investment right now in your books of accounts? 20K only, no? Because you reduced 180K, so 20K will be existing in your books of accounts. Clear? And where did that 180K go? To P&L statement. Easy? Easy. Okay, next one. Read this question also. So X Limited has made an investment of 600 lakhs. 600 lakhs in the equity shares of Y Limited, okay, of which 50% is made in the long-term category and the rest as temporary investment, which means what? 600 lakhs they have made into current and long-term. Agreed, everyone? So 300 lakhs in current investment and 300 lakhs in long-term investment. The company's intention was to invest 300 lakhs in temporary, temporary matlab current, like only for a shorter period. So 300 lakhs, they wanted to invest in current investments and 300 lakhs into long-term investment. Done. This is clear. What else is given? They're saying that the realizable value of all the investment on 31st March, which is the year-end date, became 200 lakhs only. How much did you invest? 600 lakhs you have invested. But they're saying that the realizable value by the end of the year is only 200 lakhs because Y Limited lost a case of copyright. Okay? They have lost a case of copyright. From the given market conditions, it is apparent that the reduction in the value is not temporary in nature. Can you see this clearly? They only told you that it is not a temporary in nature, because mostly what happens when you have a copyright means from that copyright you start earning revenue, right? And when you lost a copyright means what? Your revenue is affected. You might be into losses. You might have to incur more cost for, and the revenue might come down because of, if this company is such kind of a company which depends on copyright, they told that this is a not a temporary reason means the company is mostly depending upon copyrights only. So your revenue is at stake and your you will have to lose your value, right, in future. This is like a permanent reason. They only clearly told you it is not temporary reason. Now what do you have to do? Now what do you have to do? How will you recognize this in your financial statements? The question is that, how will you recognize this? What will you do?
Yes, ma'am.
Yes. So what will you do with the current investment,
Ma'am, current investment is 300 lakh. So,
Hmm.
and we have given 200 lakh of realizable value. So, we calculate
Yes.
RV.
That 200 lakhs, is it only for current investment or only for long-term investment?
It's a long term.
They
Long
told
term,
for, no, they told for all. Can you see that word? That
okay, ma'am.
realizable value is for all. That's why reading the question is very important. Okay. For all matlab, that they are saying that this 200 lakhs is realizable both for current and long-term investment together, which means for 600 lakh investment, they can only realize 200 lakhs, it seems. That is what they're telling you. Now it's clear.
Okay, ma'am.
So tell me, what will you do now?
Then it will be 400 lakh.
Where 400?
600 minus 200.
Okay, 400 lakhs is the total loss. Fine. But then we have a breakup, no? We have a breakup of current and long term. And then the standard also gave you the treatment for current and long term differently. Anyone else wants to try? I think Anil is. Anil?
Ma'am, actually, lots of background noise. I cannot answer, like distract class. I'm
Okay, answer.
audible, ma'am.
You're audible. Answer quickly so that your noise will not disturb us.
Ma'am, the breakup is given proportionately, right? Like
Hmm.
for the short term and the long term.
Hmm. Yeah.
Am I correct, ma'am?
Yeah, they told 50%. No, they told 50%. So I'm out of the entire investment that they made, 50% is long term, is what they told. So I took 50% in long term and 50% in short term, which is nothing but the current investment. Now, my question is, what will you do with current and what will you do with long term? You at least tell me, what will you do with current investment? What is the treatment of current investment? Carrying away.
Current investment will be valuing at cost after adjusting the loss.
How will you? That's what is my question. How will you answer completely?
You need figurative explanation, right, ma'am?
Sorry?
You need figurative explanation, like with figures, right?
Yeah.
Uh, Ma'am,
About
the
current.
loss is for.
Tell me about the current investments. What will you do with current investment? I got so many answers in chat box.
Ma'am,
Right.
will value current investment after adjusting the loss of
Hmm.
200 lakhs.
And 200 lakhs?
Ma'am, I'm a bit confused, ma'am.
Okay, fine. Okay. Okay, I saw a new name raising hand today. Let us ask him.
Ma'am,
Yes.
600 lakh was our cost, ma'am, and means investment, total investment. We will deduct of 400 because 200 is what is remaining now. That is the
Hmm.
carrying cost, we can say.
Hmm.
Out of 200, 50%, 50% we can give it to the current and also to the long-term investment.
Hmm.
Then it becomes 100 to the long-term and current to the 100. Then,
Okay.
and the 200 is what the loss in each of the current and also the long term. So this loss will go to the profit and loss account, and then 100 lakh will go to the balance sheet, like under investment, it goes to
Hmm.
the asset side of the investment after reducing. But this difference will go to the profit and loss declining.
Okay. Now, can we say that the current investments have to be carried at what? The standard is telling you what for current investment? It should be at cost or fair value, whichever is
Cost
lower.
or the fair value, whichever is lower.
So this is right to show it at 100 lakhs and showing this loss to P&L statement is fine.
Yes.
But what about long term? The standard told you
Long-term-
that long term investments have to
long-term
be
is
costs, no?
long term. We have to see if it is in a permanent decline. Then we have to decline it, and then we have to send it to the profit and loss.
Right. Very good. Okay. I hope this is very clear. Okay, I'm repeating what she's saying. She's right, and most of you are right. I think most of you have put it in the chat box, so almost you are right. I will just quickly tell you what happened here. We made an investment of 600 lakhs, and then 600 lakhs was not entirely into a short term or long term. They want to split it into 50-50. So 50% in long term and 50% in short term. So what is the cost of investment here? For current, it is 300 lakhs, and long term also it is 300 lakhs. Next, at the year end date, we came to know what is the fair value. What is the fair value here? It is 200 lakhs. So again, we have split this 200 lakhs into 50-50%, which gave us a fair value of 100 lakhs for current investments and 100 lakhs long-term investment. Now, for current investments, what is the treatment? The standard is telling you that for current investments, it can be cost or fair value, whichever is lower. So hence the fair value here is lower. You will show your investment at fair value, and loss of 200 lakhs you will recognize in P&L statement. Good, it is done. Now, what about long term? For long term, they told a condition. You should only show it at cost, but with an exception that if that loss is due to a not temporary reason, then you can and you have a decline and send it to your P&L statement. Then loss can be recognized. Since here it is clearly mentioned it is not a temporary reason, you are going to send this loss of 200 lakhs also to P&L statement. Is this clear? Am I clear? This question is clear. Okay. Now I will also in here only I will also change this part. Now suppose that in the question this is mentioned that this is a temporary reason. Then what do you do? The question, that word not is not there. They told this is a temporary reason. Then what will you do? Then current investments this treatment will remain same, no change in that, because for current investments it has to be cost or fair value, whichever is lower only, that will not change. But what will happen to long term? Long term have to be shown at 300 lakhs only. The value cannot come down by 100 lakhs. It has to be shown at 300 lakhs, which is cost only. Clear? I gave you both the instances in the same example. Now I think you all are clear with how a carrying value have to be shown. Sure. Okay. We'll pause, we'll take a break. And then after this, I think you will have some questions wherein you will have to show how do you value the investments. Till now, we have just seen how the carrying value have to be shown. But from now, the questions will be completely like the problematic. How will you value them? What will be the value you will show? How will you show it? How will you show the balancing figures and all that we'll see. Okay. So come back after the break and then we'll start doing those questions. Technically, we'll break. So we discussed about the carrying amount, right? So what should be the value you will have to show in your books of accounts at the end of the year for current and long-term investments both. Now, the standard also talks about the reclassification of investment, which means when it was classified as long-term, you want to change it to the current investment, or it was classified as current and you want to change it to long-term. Why want to change it, or it is the intention of the organization or the company who have invested, right? When I have purchased, I thought that I'll only hold it for 6 months, and later when I see the performance of the company, I feel that it is performing good and I want to hold it for a longer period. So then what I will do, I will want to shift it from current to long term, or in the reverse situation, I want to shift it from long term to current. Happens, right? So the company's intention is changing here. I don't want to hold it for a longer period, or I want to hold it for only shorter period. The intention of the company is changing. Then you can do the reclassification. So how will you do the reclassification, or what will be the impact? The standard is saying that if changing from long term to current investment, right? Long term investment, it was earlier a long term. Now you want to change it to a current investment. Then what you will have to do, you will have to show it at a value lower of cost or carrying value at the date of transfer. Right? When you are changing it from current to long term, same thing, but only difference is fair value at the date of transfer. So you will have to see for on the date of transfer, well, what is the value of cost or carrying amount in case of long term to current, and current to long term, you'll have to see for cost or fair value on the date of transfer. Then that value have to be recorded in your books of accounts, right? We'll do a problem. Also, I think I didn't discuss about the disposal of investments. Now, what is the formula for disposal? Anyone? What is the formula for disposal? For PP. I'm talking about PP only. Investments, anyway, I didn't tell you. So, what is the formula for investment? PP, disposal. Are you all back? Are you all there? How will you calculate the profit or loss on disposal? When you dispose of an asset, PPE, in for example, PPE, how will you calculate profit or loss? What is the formula? You'll have to compare what? Carrying amount and the disposable amount, right? Whatever is the sale value, sale proceeds, we can say. Same thing will apply here also. And let it be any disposal, it has to be compared with the disposal amount and the carrying value only. Same thing is told in this standard also. You're going to compare the carrying amount and the net proceeds, net of expenses. After your expenses, whatever is the value, and any difference will go to P&L statement. This will not change, right? Okay. Now, do this question illustration 3. So ABC Limited wants to reclassify its investments in accordance with AS 13 and decide to state on the amount of transfer based on the following information. So what is the information given here? What is the first one? What is the first one? Read the first one. A portion of current investments purchased for 20 lakhs. So this is cost to be reclassified as a long-term investment. So this is what from current to long-term. This transfer is from current to long-term. Okay. As the company has decided to retain them, since the company wants to retain them, they wanted to transfer it, or they want to reclassify it from current asset, current investment to a long-term investment. And what is the cost of the investment? 20 lakhs. Now, what is the market value as on the date of balance sheet? 25 lakhs, right? Okay. Now, I told you the chart. So according to the chart, whatever is standard is talking, when it has to be reclassified from current to long term, what will be the value that you will show? What will be the value that you will show? Should it cost? What will be the value? It should be cost or fair value on the date of transfer. Now on the balance sheet date, what is the value? 25 lakhs. So this, if you consider this as fair value, fair value or cost is lower. So what will be the value that you will show? 20 lakhs. Agreed, everyone? Why is Sama saying 25? It should be lower of these two. So which is the lower value? 20 lakhs, no? So 20 lakhs have to be shown. Fine. Agreed? Or anyone has an objection? The standards told you when you're reclassifying it from current to long term, it has to be shown cost or fair value, whichever is lower. Now, what is the cost here? 20 lakhs. What is the fair value here? 25 lakhs. Whichever is lower. What is the lower value here? 20 lakhs, no? So I have to show it at 20 lakhs. How much is the value already there? It is already at 20 lakhs only. So which means what? In the first case, I don't have to change any value. I can retain it at cost only because the cost is the lower value here. No more adjustments have to be done to my balance sheet, or no more adjustments have to be done to my P&L statement. Are we clear? Now, are you clear? Now look at the second. I think then we will have more clarity. Look at the second one. They have another portion of current investments which are purchased at 15 lakhs. So this is cost. 15 lakhs is cost here to be reclassified as long term. So this is also a current investment which I want to classify as long term investment. Okay, fine. Now the market value of these investments on the balance sheet date is 6.5 lakhs. Here, what is the cost? 15 lakhs. What is the fair value? 6.5 lakhs, whichever is lower. So what will be the value you have to show in your books of accounts right now? With the reclassification, it should be at which value that you have to show. $6.5 lakh. Okay, most of you told 6.5 lakh, right? Because whichever is lower, you have to show it at 6.5 lakh. Now, what is the value you already have? You already have how much in your books of accounts? Already the investment is 15 lakhs, but you have to bring it down to 6.5 means you will have to do something, no? What is that you have to do? You will have to see what is the difference. 15 lakhs minus 6.5 lakhs. What is this value? Calculate this value, no? $8.5. Okay. 8.5 is the loss you will take into P&L account. Are we clear? You understood the difference between the first point and second point. What happened in the first point is there also we compare cost and fair value. Here also we compare cost and fair value. But what happened in the first case? Cost was lower there. No more adjustments were done in the first case. No more adjustments were done. No need to send it to P&L statement. No need to send it to balance sheet. Nothing have to be decreased in the first case. But in the second case, what happened? Fair value is lower. When there is a decline in the fair value, obviously the loss has to be taken to P&L statement. So what will be the journal entry there? What will be the journal entry there? P&L account will be debited with 8.5 lakhs to investment. 8.5 lakhs. So you will have a decline in the investment value and that loss will go to P&L statement. Is this clear? This is for the second case only. First case, I will not post this entry. Why? Because already it is at 20 lakhs, which is cost, and I don't have to decrease any value. Am I clear? Understood the difference between the first and the second question? Both are from current to long term only. Both have to cost or fair value, whichever is lower only. But why are we not writing this journal entry for the first one? It is because there was no loss. It can be read at cost only. Okay. Now let's look at the third one. What is happening in third one? Now, certain long-term investments no longer considered for holding to be reclassified as current investments, which means this will be from long-term to current, right? If it is long-term to current, then our reclassification point that standard told you. It has to be at the cost or carrying value, whichever is lower, right? Now, 18 lakhs is the cost. This is the cost, right? Okay, but it has to be written down to 12 lakhs. Now, this 12 lakhs is considered as the fair value, or it will be considered as the carrying amount that should be continued. So either cost of 18 lakhs or the carrying amount of 12 lakhs, whichever is lower. So what will value you will show here? What value you will show here, whichever is lower, it has to be declined by how much then? It has to be declined by how much? 6 lakh loss. This will go to P&L. Clear? Sure. Shall I move on then? The reclassification part is clear. So when it is classified from current to long term or long term to current, how you will have to reduce. It is almost like how we were doing the carrying amount ka thing only. Carrying amount ka question also we did the same thing almost. We'll just have to check for what is the cost of fair value. Same thing we are almost doing. But one thing you have to remember is whether if it is from current to long term or long term to current. That if classification you do, then it is fine. Okay. Disclosure part is left that we will do in the end once we finish the entire standard. Now I want we'll do a few problems again. Disclosure part is only left. The standard is done. Actually, the standard is done. The standard talks about only very few things here. So we talked about the scope, we talked about the definitions, and we talked how the investment have to be calculated and what should be the carrying amount in case of disposal, in case of reclassification, and then disclosure. That's it. The standard is very small, but then problems, doing the problems here is the main part, right? Okay. Let us do this question. Now look at illustration 4. Look at illustration 4. Mrs. Innovative Garments Manufacturing Company Limited invested in the shares of another company on 1st October at a cost of 2,50,000. Right? Now, I have invested in a different company ka shares, which is at a cost of 2,50,000 cost. Okay. It also earlier purchased gold of 4 lakhs and silver of 2 lakhs on 1st March 2011. And the market value as on 31st March 2014 of above investment are as follows. So when did you purchase this gold and silver? On 1st March 2011. And you are doing the valuation on which date? 31st March 2014, which means it is almost after 3 years, we can say. Yes, it is almost after 3 years. You are trying to check for the value of the silver and gold. Silver, I'm talking about silver and gold. Okay. Now, if you consider shares, the shares were purchased as on which date? 1st October 2030. And we were just holding this for how many months? I think almost October, November, December, Jan, Feb, and March, 6 months. So we were only holding shares for 6 months. But silver and gold were being held for almost 3 years. So can I say that these two are long term? Can I say these two are long term? Because I was holding them from almost 3 years, and mostly gold and silver are held, to be the intention of holding them will be mostly long term only. Nobody wants to sell in a shorter period. So this one reason that it was there from 3 years, that's one reason we can say it is long term. And the other reason is mostly gold and silver are held for more than 1 year or for a longer period. So do you all agree that gold and silver are longer, long-term investments? Okay. Now these two are long term. Fine. Now what about the shares? Can you say that these shares are long term or short term? Can we say that? Looking at the question, you are actually holding this for how many months? Only 6 months. You just purchased it 6 months back. Did the question clearly tell you the intention of holding it for shorter period or longer period? Was was any intention given here in the question? There was no such intention given, right? And if you want to assume this shares as short term, you can assume this as short term or current. If you want to assume that these are held with an intention to hold it for long term, you can hold it for long term, because the question is not clearly telling you about short term or long term about the shares. I'm talking about the shares. So you can assume yourself, or you can write both the answers also. You can write what if it is a short term, what if it is a long term. Both the answers can be written, or you can take one assumption and write the answer also. Right? Now, what is the question finally? The question here is how above investments will be shown in the books of accounts for the year ended 31st March 2014 as the provisions as per AS 13 is what they're saying. Now, you tell me, what will you do with shares? What will you do with gold and silver? Both fair values and cost are given to you. So what will you do? First, let's talk about shares. What will you do with shares? What will you do with shares? At what will I have to show this? You understood the question, no? Question is clear. Both costs are given to you, fair values are given to you. They're asking you how will you record for, or how will you show it as per AS 30. So shares, what will be the value? Some are saying it is 2.25 lakh and some are saying 2,50,000. So what to do? Mixed answers. You remember what was told by the standard? What did the standard tell you? The standard tell you? Cost or fair value, whichever is lower. Yes or no? You remember that point? Okay, now what is the cost? What is the cost? This is fair value. We all know that. What is the cost? I'm adding one more column here. What is cost here? For this, the cost is 2,50,000. For this gold, the cost is 4 lakh. And silver, the cost is 2 lakh. Okay. Yes. So cost or fair value, whichever is lower, matlab, what should be the value? Final carrying value, 2,25,000, no? Yes or no? 2,25,000 should be shown. So what will happen to the difference? What will happen to the difference? Difference will go to P&L statement. Agreed? Clear with the first one? Okay. When will I do this? When will I do this? If I am assuming that these shares are held for a short period. Now, if these shares are assumed that these will be held for a longer period, if these are long-term investments, then what will you do with the shares? They should be shown at 2,50,000. They should be shown at cost only. They will be shown at 2,50,000. Very good. So you're clear then. You are clearly understood. If it is a long-term investment, what will be the value? If it is short-term investment, what will be the value? Very good. Now, what will be happening to the gold and silver? Gold and silver have to be shown cost only. Why? Because this is a long-term investment. These have to be shown at cost only. This will be shown at cost or fair value, whichever is lower. Any difference will go in this statement. If you are assuming short-term, if you are assuming long-term, then this also will be shown at cost only. I hope this question is clear to you. This question talks about the short-term and long-term investments ka carrying amount. How will you show the carrying amount of these investments? Clear? Shall I move on? Okay. Now look at this question, illustration 5. So in 2011, Mrs. Y Limited issued 12% fully paid debentures of 100 each, right? Interest being payable half yearly on 30th September and 31st March of every accounting year. So the interest that have to be paid is 12%. And when they're paying these interests 2 times in a year, half yearly they are paying. So on 30th September, one time they will pay you, and again on 31st March, they will pay you again the interest, right? This part is clear. This company, Y Limited, is issuing debentures. They are not buying anything. Okay. Nobody is buying there. They are only telling you who issued the debentures. So Y Limited has issued debentures, 12% debentures of 100 each, and half yearly payment of interest. Done. Now, who purchased these on December 1st? On December 1st, dates are very important. On 1st December, Bull and Bear purchased 10,000 of these debentures at 101 x interest price. X interest price is 1, so they have purchased it for 101, also paying a brokerage of 1%. So I purchased it for 101, and I also paid 1% extra brokerage or X interest amount of the purchase. Now on 1st March, what happened? The firm sold all these debentures at 103. So I purchased for 101 purchase, correct? And I sold it for 103. This should be clear. Both are X interest price, and both we are paying 1% brokerage on the X interest price. For both of them, we paid brokerage. They're asking you to prepare investment account in the books of accounts of Bull and Bear. Bull and Bear, for Bull and Bear, is it an investment or is it the debenture that is issued? Is it an investment for them or it is a debenture that is issued for Bull and Bear? Investment. Pakka, everybody agrees that for Bull and Bear it is an investment. Yes? Okay. Okay, done. Okay, great. So you all are clear with that. Now they're asking you to prepare the investment account in the books of accounts of Bull and Bear, right? Now, do you all have an idea what is X interest and cum interest? These two words, you all have an idea? Okay. Now, X interest and cum interest means sometimes what happens is when I'm purchasing a debenture or when I'm purchasing a bond or when I'm purchasing some kind of all these interest bearing, investments, what happens is they told you 12%, 10%, all these interests are told to you. Now, cum interest means your price, whatever you are, cum interest price, they say, right? So you have to buy it at 110. If you have to buy 110 means this 110 is the price that you are paying. Is this 110 includes interest component or not is the question. Okay. Yes, you are right. Yeah, some are already putting it in the chat box. You are right. What is X interest and cum interest? Yeah. So X interest means whatever interest you are eligible to receive, your price doesn't include any interest that you have a right on. Okay. Cum interest means you have a right to receive interest. Right to receive interest. What happens in cum interest? If I pay 10 rupees to buy a particular share or a particular investment, this is, they told that this is cum interest means after purchasing, I will have a right to receive interest on this. Interest, company will pay interest, so you will have a right to receive interest on this. But this X right means you will not have a right to receive interest because interest is already paid. So the price, whatever you are paying, are without interest. Okay. Cum means with interest, X means after interest. That's it. Simply to remember, X means after interest. Cum means with interest. Is this price, that 110 what you're paying or 105 that you're paying, is it with interest or without interest? This will change depending upon record date. There will be a date called record date, which means what? The company says that I will pay interest on 30th 31st September, March or 30th September. So on this date, are you holding the shares or not will decide whether it is X interest or cum interest. Okay. For now, you understand X interest means without interest, cum interest means with interest, right? How this will work, we'll see, or you will understand when we are doing this problem. Now, this is the question. Okay, so this is the question. We are preparing investment account. Now, I want you all to do it with me. Yeah. When did we purchase? When did we purchase? We purchased it on 1st December 2002. Okay. And how many shares did we purchase? We purchased, sorry, if I'm saying shares, I assume it as debentures. If I might be, my intention is debentures because in this question it is debentures. Okay. How many debentures did we purchase? 10,000. So what will be the nominal value here? What will be the nominal value here? Anyone? Nominal value or the par value? What will be the nominal value or the par value? Is it given in the question, first of all? It is given here. If you can see here, this is the nominal value. They told that 100 each. It is issued at 100 each. So that's your nominal value. So what is the nominal value of your share, your debenture that you have purchased? It will be 10,000 into 100. I think it will be 10 lakhs. Right? Okay. Now, when you are purchasing means, what will be the journal entry? When you're purchasing a debenture means, what will be the journal entry? Respond. What will be the journal entry when you purchase an investment? Investment account or debenture account debit to bank. Okay, very good. So what will be the debit to bank account? Everybody agrees to this, right? Since I am investing in a debenture and I am paying it through cash or bank, I am going to write two bank accounts. So what is the nominal value I got? 10,000 debentures of 100 each. So I have returned that. But did I pay 10 lakhs? No, I paid more than this. Why? Because I did not purchase it for 100. Let us do that calculation. What is the cost of investment? You have purchased how many debentures? 10,000 debentures, and they told you have purchased each one of them at 101 rupees. What is this value? Calculate the value, no? 10,000 debentures were purchased for 101. 10 lakh, 10,000, okay. They also told you paid a brokerage at the rate 1%. Calculate this also. 1% on this, I think, will be 10,100. Cost. Total cost of investment is how much? 10,20,100. Is this right? Okay. Okay. So I'm taking that 10,20,100. Okay, done. Now I have also added interest column. Can you see? Now listen this carefully. This 10 lakh, writing this 10 lakhs and that 10,20,100 is easy. But this interest only you will not understand. Now listen this part. When will the interest be paid generally? They told interest is paid on 30th September and 31st. 2 dates they have given you. They're going to pay 2 times. Correct? Okay. Now, when did you purchase this? When did you purchase this? On 1st December. So when you actually purchased on 1st December, what is the interest that is accrued? What is the interest that is accrued? They must have paid on 30th September. Interest must have been paid as on this date. Yes or no? The company has paid interest on 30th September. After this, they will not pay you again. They will only pay you when they will again pay you on 31st March. Correct? But you purchased somewhere in between. Since you purchased on 1st December, will they tell you that I will give you months ka interest? They won't. No, they give you in between. They will give you as on the dates that they have or they generally are issuing, which means from the interest that is already paid to the date of your purchase, how many months are accrued or how many months interest is accrued? How many months interest is accrued? Most of you told 2 months. Do everyone agree that 2 months interest is accrued? Nothing but October and November. That's it. October and November ka interest is accrued. Not December. Because it is 1st December, you can't take December month. You can only take it till 30th November because you purchased it on 1st December. No? So only 2 months interest is accrued. What is the interest for these 2 months? Let us calculate. You can also write which 2 months, October and November, so that you have a clarity when you're redoing the problem. You will have a clarity. Okay, interest accrued for 2 months. How much is the interest that is accrued? 10 lakhs is the nominal value into what is the interest rate? 12%. Now, one more question I will have to ask you here. Did I take 10 lakhs and then calculate interest? I have purchased it for 10 lakh 20,100. No? Why did I take interest calculation on 10 lakhs? Why not 10 lakh 20,000? Anyone? Very good, very good. Interest will be always calculated on nominal value. This is one important point everyone have to remember. Because what happens generally is you must have calculated this cost, no? So people keep calculating interest on this, which is very wrong. Which is very wrong. Any share it is, let it be any share, any debenture, the interest or the dividend or whatever it is always paid on nominal value only. Okay, very important point to remember. It will never be paid on the cost that you have purchased because market may you will buy it for higher prices. But how can people pay dividend on that price that you have purchased for? They will not pay. They will pay you on the nominal value only. Correct? Okay. So this is clear. How much is this interest accrued? Calculate and tell me the value. 20,000. Okay. Writing 20,000. Just column. Okay. Done. Next, what happened after this? 1st March 2013, the firm sold all these debentures. You sold them. When did you sell? 1st March 2003. Okay. What is the sale value? 10,000 into 103. How much is this? Calculate. That's 30,000. Okay. And they also told that for sale as well, you have incurred a brokerage of 1%. So at the rate 1%. $1,300. Should you add this or remove this? That's a question again. Here, what did we do? We added brokerage. Why? Because 10 lakh 10,000 was paid to the company, and 10,100 brokerage was paid to the broker, the intermediary. But now what will happen? This amount you will receive, and this amount you will have to pay, right? So this has to be removed. Are you having the clarity? When it is a sale value, obviously it's a cost, so it has to be removed. It is an expense. Very good. Okay. So what is the final value? 10,19,700. Done. So this is the third calculation that we have done. And this is the second calculation we have done. First one is this. Now we'll do one more calculation. Fourth calculation. Interest accrued. This is for sale. Okay. Now, when did we sell? When did we sell? First March. So how many months interest is accrued? Before our purchase and before our sale, the recently paid interest date was what? 30th September 2002. So how many how many months ka interest is accrued in this? 5 months. Everybody agree to this? 5 months. Nothing but from October to February only, because it is first March. So I'm not considering March. You can't consider March. If you consider March, it will be 6 months, but March cannot be considered because it is just first March. October, November, December, Jan, Feb, only 5 months. Clear? So 5 months ka interest is accrued. Now, how much is the interest? 10 lakh into 12% into 5 by 12. Calculate this amount. How much is the interest? 50,000. Okay. So this part is clear. I think the interest part is clear to you. I'm trying to see when was the last interest issue, and when did you actually purchase or when did you actually sell. Till that date, how many months ka interest is accrued? I'm taking that only. Now, how much is the nominal value? 10 lakhs. Interest is 50,000. And here the sale value, I mean cost or sale value, whatever it is. What is the value? 19,700. Here also it will be by bank only. Why? When you sell, you will receive it in cash or bank. So I'm writing bank only. Are these two clear? Everyone? This part is clear. One was purchase. Nominal value was 10 lakhs, but you purchased it for 10 lakh 20,100. And you are selling entire shares. The nominal value is still 10 lakhs only, but you sold it for 10 lakh 19,700, which is after brokerage. The value that you receive. Clear? Calculate the balancing figure. That's it. We are done. Nothing else. No other transactions are given. No. So we can calculate the balancing figure. Calculate the balancing figure. Here it is 30,000. Okay. This is balancing figure. Okay. And 400 where? You wrote 400, but tell me which side also 400. Acha, credit side. It's a loss. Okay. Oh, got it. Balancing. Clear, everyone? I just did balancing only. Nothing else I have done here. Both the sides we have done balance. Sometimes the both columns can have balancing figure on the same side also, but here you got it on different sides. But what does this mean? What does this mean? Now look at this figure. Look at this 30,000 figure. This figure means what? You have interest received for only 3 months. you received interest only for 3 months, while you actually purchased it on 1st December and you sold it on 1st March. So which means you have a right to receive interest for how many months? Only 3 months, na? Agree? Yes, that is what is reflected. So this 30,000 is nothing but income, the interest that you received for that 3 months of your holding period. But then when you are actually buying and selling, it will have the entire interest accrued. But when you're actually, calculating, you will only receive the interest for the period that you are holding it for. Okay, this part is clear. Only 1st December to 1st March. Now, this 400 then. What is this 400? This 400 is nothing but you have purchased for 10,20,000, but you sold it for that 10,19,700. So that is the loss that you have. The cost and the selling price, the disposal amount, we can say. Because of that, you have this 400 loss, and this 30,000 is nothing but the interest payment that you have received for holding this for 3 months. Since you are holding these debentures for 3 months, you have received interest of 30,000, which is a gain sent to P&L statement, and this 400 is sent to the statement in the form of loss because you sold it for a lower price than your cost. Clear? Any questions in this table? Fine. Okay. I'll stop here, investments, because I wanted to take a few questions on PP also. I told you I'll take a few questions on PP. Anyone wants to leave class, you can leave. If you don't have questions on PPE and all, you can leave. But for some time, I will discuss, there are few questions. People are having questions on PPE. So I'll take up those. Okay. Others, if you want to leave, you leave. Done? Okay. So those who are having questions. Who wants to go first? Someone was asking questions on BP and all. Who wants to go first?
Ma'am, I have a question in a TYQ of a PP chapter.
Hmm?
In that, ma'am, 17 number of TYQ, which is a scenario-based question.
Hmm.
So, ma'am, in that, how they calculated the before how they calculate the machinery cost, which is 1 lakh at the starting, which is acquired value of that machinery, and how they calculate, ma'am, the discount rate of for that 8%.
Discount rate 8% is given in the question, no? 1 divided, what is the formula for discount factor? 1 divided by 1 plus R whole power N. We have that formula for discount, calculating the present value and discount factors. 1 divided by 1 plus R whole power N. You have to use that formula to get that discount factor.
Ma'am,
Okay?
actually, in this, I see the answer, I refer. I'm not
Hmm.
able to the solution.
You know the discount factor calculation firstly.
No, ma'am.
That you have to refer. Refer that first, how to calculate the discount factor. Then I think this will be clear to you. What is the other one you asked? What is the other one you asked? In the
And
same question.
ma'am, other in which question you have taken in the previous class? That Akshar Limited. That is we
You're
entire
talking
chapter.
about investments or PP?
PP, ma'am.
PP may. Okay.
Ma'am, in that जो life useful life बोली गई है of a motor, which is new motor.
Which question? Which question? 16th question you're talking about?
Which you taken in a previous.
Okay, yeah, got it. Tell me.
Ma'am, in that I taken as a of a interest charge paid to suppliers against a deferred credit. In that is note is given, ma'am, in a solution. When I am solving to this question, note is given. So I'm not written a note, but when I referred the answer of the model, I compared to them and note is given that key it is a not is a qualifying asset, which means this interest is paid on that supplier, which is providing to a financer, right, ma'am? But which is not a qualifying, but we not a certificate. You told ma'am key it is complete. It is covered in a AS16, which is
Borrowing
borrowing.
cost. Yes, yes.
So, ma'am, in that I question had if
Mm.
question is mentioning in a question is mentioning in exam paper,
Mm.
if it is given as a qualifying asset, then
Mm.
we added no, ma'am.
Yes,
Then
then
we
you have to add. Yes, that interest, whatever 1 lakh you have now, if
huh.
in the question it is mentioned that it is a qualifying asset, that 1 lakh is added to the cost of the asset. Yes, you're right.
Okay, ma'am, understood. Thank you, ma'am.
Yes, anyone else? I think Aditi, you were also asking something, no? Many people were asking questions in the chat box for PP, or at least if you have questions on investments, also you can take it up. Anyone? Yeah.
Yeah, can we? What are the situations when investments are converted to long term to short term or short term to long term? Suppose I buy in the question also, we bought investments as a current investments only, current only. But why should we convert it into long term actually?
The intention of the company. I gave you an example also, if you remember. I told you, you purchased a company ka share, okay, or a debenture, and then you thought that you will only invest for 6 months. That was your intention when you purchased. So you
Correct.
held it as a current investment because it is only for 6 months. You have held it as a current investment. Later, after it's 5 months done, you're almost into selling it. You see that the company is doing well, and the company is performing so well that you feel that in the next year it will increase prices at a very higher price. Then you will have good amount of profit. Yes, then your intention change now. Now my intention was just to hold for 6 months, but since the company is performing well, I wanted to change my intention and change it to long term from short term. That's one reason. Major reasons are the intention of the company only. When the company is performing so well, you want to hold it for a longer period. And sometimes if the company is not performing well, your intention was to hold it for 2-3 years. But if you feel that the company is almost into bankruptcy, then what will you do? You have to sell it, no? Then you will convert into current. Agreed? Repeat, Rama. Clear your question?
But in that year we cannot change it. Current to suppose before
In that year
31st
only, we
December.
are going to change. No, whatever calculations that you have done, we are checking for the fair value, cost, and all. No, then you will see whatever is lower and record. You will do it at year end only. At the year end, you feel that it is no more current or it is more long term. You want to reclassify. At the year end, you will decide whether to reclassify it or not.
Okay. Thank you.
Ma'am, am I audible?
Yes. Tell me.
Ma'am, in illustration 8, I have a doubt. I understood the concept of
Which one? PPE?
yes, ma'am.
Okay.
In
Illustration
8,
8.
I understood like what is the answer and I understood the concept of it, but the answer which is written in the module, I can't understand what are they trying to tell.
Illustration 8 is talking about cost of previous part in inspection. Is that what you're talking about?
Yes, ma'am. You told that if we can't find it, we can take the previous year value to figure it out.
Similar assets.
Similar
parts.
assets. But
Now, in the first question, see that 8 and 9 you can read together also. 8 and 9 illustrations. 8 is asking you, what if you don't have? What will you do? Can you ignore is what they're asking. Can you ignore? If you can't find a value of a particular part, can you ignore is what they're asking in the first question, 8th question. Okay, illustration 8. So we will say no. We can't ignore. You will have to still derecognize it only is what we are saying. In the 8th question. In the 9th question, what they're saying, when you can't determine the value, how will you do it? Then we are saying that we will try to find for similar parts. Read both of them together, then I will understand. Because in the first question, they asked half of the question, and in the second one, they asked the remaining part of the question. Read both of them together. What if you can't identify the value? Then what will you do? But still, you will have to derecognize. Then how will you derecognize? By finding the similar assets ka or similar parts ka value. Okay.
Okay, ma'am. Okay. Ma'am, I also have another doubt. We had class of PP, right? Is it does accounting standard gives the class, or company decides like what class should?
Classes, I mean, they just have given you few examples in the standard that these can be your classes, but it is again left to the discretion of the company to decide whether, if you remember, we have done one example, office building, industrial
Yes,
buildings. So that way you can divide your classes. If the the distinction is very clear, you can. The standard told you buildings, but you want to divide it, you can divide. Just examples will be given to you. These can be such kind of classifications, but you can decide to increase or decrease the classifications.
Okay, ma'am. Okay.
Ma'am, while reclassification, ma'am,
Little louder, ma.
While reclassification, ma'am.
You're talking about investments?
Investments, yes, ma'am.
Yeah, okay.
From current investment, I'm just reclassifying into the long term. So when I'm making like that, so I have to pass an entry for that. The cost is same. There is no changes. Like market value is increasing, so I take the lower of the market value or the
So you retain at cost only.
Retained at cost only.
Okay.
So I have to change it, the heading.
No journal entry is required here. When you're showing in the balance sheet, you don't have to show it in the long-term place. You will show it in the short-term.
Short-term.
Only the classification will change. That's
okay,
it.
only the head I will change it.
Head will change in balance sheet. That's it. Yeah. You don't have to post any journal entry because both are investments only anyway.
Yes.
So the heading is anyway investments account only. So that will not change. Only the classification will change in the balance sheet, on the face of balance sheet.
Okay. Ma'am, then another one is if I'm holding a long term, I purchased for a long term and I wanted to sell it within 1 year, I wanted to sell it. That means it is not a
Your intention was to hold long term, but you sold it within 1 year, is what you're saying.
I wanted to sell it. That time I wanted to convert that long term into short term, then sell it, or just directly sell it.
Not needed. I mean, if you randomly sold it, you can't. No, when you randomly sold it, you will just dispose it off, and you will see whether it is profit or loss. You had to sell, you will sell it. It's just an intention to hold it for longer period. But you sold it today before the year end. What you will do? You will just see whatever is the disposal amount and see whether profit or loss and recognize it today. But by the year end date, if your intention is changing, then only the classification will change. But that will be done at the year end date only.
Okay.
Clear? At the year end date, what is your intention? Will your intention change? If your intention is changing, then change the amounts, fair value, cost, lower of cost or fair value. But before itself, you have sold it off, then no point. At that date, whatever is the disposal amount, you can see profit or loss, and it is done.
Okay. Thank you.
No one else?
Ma'am, in a PP, there are case studies we discussed in a previous class. So, ma'am, in that
Case study, matlab? Which case study?
case study which is related to revaluation of asset.
One
Two cases.
example that we discussed. Okay.
Yeah, ma'am. In that one, first case we taken calculation for calculating the gain allocated in proportionately to cost and depreciation. Ma'am, in that cost we taken the
I
900.
asked you to take a revaluation factor. You're asking about that problem, right?
Yes, ma'am. Yes, which is
Okay.
accounting treatment for revaluations.
Got it. Yes, tell me.
In that first case, we given as a calculation for proportionately dividing to the cost and depreciation. Then in
Yes.
second case, which is not given, so we taken as a first
You
example
will
for the
eliminate accumulated depreciation completely, and then from the revalued amount, you will start depreciation again
means we
from
debited
that
to
date.
accumulated depreciation account, which is temporary.
Yes.
Then 900 is comes into the P&L, right, ma'am?
I don't know what are those amounts. I just gave a random example that day. I don't know
Okay.
the
In
amounts. What is
second
that
case,
amount?
amount is 900, which means 1,500 is after revaluation amount.
Okay.
And revaluation gain on that, which is a cost plus accumulated
Revaluation gain is 900.
Yes, ma'am. Yes, 900
Okay.
is the revaluation gain. So, ma'am, in that
Okay.
case, we transfer to the P&L, right, ma'am? Which is gain.
Revaluation surplus will go to owner's equity, no? Owner's capital,
The
no?
owner's capital account
Yes.
gain.
Revaluation surplus should go to owner's capital only.
And in
Only
exception, it goes to the P&L. In exception case.
exceptional case only you will transfer, because in earlier we had increase or decrease. That will depend upon exceptions. That is the
Then can I
exception.
take you taken as a factor calculation in
Sorry.
previous, for instead of you taking the case study in study mat, you taken the factor calculate, then we divide into the accumulated
In
and
your material, if you see the study material, they must have taken the proportionate basis calculation. But I feel that will confuse few students. So I have taken this factor wise so that it is easy also for you to understand.
can I take ma'am in
Logically also
exam?
it will
Can I
match.
write an exam? And if question is coming like this, can I write in
Yes,
a factor
you
like
can.
calculation?
Yeah.
Because it's easy to calculate.
Yeah, it is easy to calculate. Yes, you can
I've
do it.
practiced this and
Okay.
easy to calculate this. Thank you, ma'am.
Okay. Anyone else, or we can close if no one else? Technical team, can we close? Yeah, we can close. Thank you.